Hello, Stephen Cruz here with MyMortgageBroker.com. Today I wanted to chat a little bit about a tool that I created for my clients and visitors to my website. And basically the tool helps you to calculate how much income you need to qualify for mortgage, or in other words, based upon how much income you have, how much mortgage you qualify for. Before I go any further, please subscribe below. Press the little subscribe button and subscribe to this channel so that you can get more of our videos. And press the like button if you like the video. Then more people will see and share this, and our channel will grow. So, before I start chatting, let's just share my screen so that you can see what it is that I'm talking about. One of the things I do with every single client when I meet with them, especially first-time home buyers, is we review how much income they have, calculate that, and also figure out, based upon their income, how much money they qualify for. Sometimes they qualify for way more purchase price than they want to and really could afford, but sometimes they qualify for less. So it's really important for you to understand, when you're going through that approval process, what your income will help you to qualify for. And that's why I created this calculator. So I have other calculators, and there's some other videos about them, and I'll put the links in the description to the other calculators we have so you can use all of them, and they all have different purposes. But this one specifically is designed to help you understand what you'll qualify for based upon your income. One of the factors that I want to make sure you understand is that calculating your income, every lender will calculate your income based upon documentation. So, and they use gross income. They don't use your net, which means that they use the income you receive before income taxes. If you're on salary and you make $100,000 a year, then $100,000 is the number. It's not that net number you get after all the expenses and taxes and all that stuff. It's the number before income taxes that they will use to qualify you and how much you qualify for. When we qualify you, typically 39% of your income can go towards all of your housing costs, and then 44% of your income can go towards your housing costs and any other debt you have. So there's a little factor in there. So if you have a car loan, or if you have credit cards or other loans or whatever, there's a factor that you are allowed to have some debt and still qualify for the maximum mortgage. So on this website is where you can find the calculators, mymortgagebroker.com/income you need for mortgage. Not obvious, but that is the page. Anyway, this is my brokerage, and this is me, my phone number. You can text or call me. I'm available all across Canada. I can help you with a mortgage no matter where you are. And so let's just scroll down. There's a table of contents that helps you to get to whatever section you want. I talk a little bit about the different parts of the calculator and how they all work, and then the calculator is right here. So let's say your income is $97,350 per year. And that's before taxes, as I said. Let's say you have 5% down. You could always change this number around if you want, but let's say you have 5% down. Let's say today's interest payments, interest rate is, I don't know, let's use 2.8485. You can put any interest rate in there you want. The interest rate does not factor in how much you qualify for. There is a government legislated interest rate that we have to use to determine how much you qualify for. And so this will just help you to understand what the payments are. It does not affect what the qualifying rate is. We'll use a 5-year term and a 25-year amortization. The 5-year term is what most people take. If you choose the 4 or 3-year term, it'll affect some of the numbers in here. One number specifically, it'll affect the balance at the end of the term, so you can see how much you pay down every year or whatever, if you want to play around with this. If you want to pay every mortgage off faster, then you can move this down. For qualification purposes, you want to leave it at 25 years because that's the maximum that most lenders will use, and that's what they'll qualify you based on, is 20 years. And so your payment will be qualified based upon this amount. If you choose to make extra payments, all lenders allow that in the future. So let's say $33.50 is the annual property taxes. Could be anything. Let's say you find a condo, or you're looking for a condo, And condos typically have a $300 a month payment. And those condos you're kind of looking at have that kind of price range. So let's use those factors and see what happens. So on the left-hand side is the qualification number, so what you've put in, and it also calculates a qualifying mortgage payment. So that's based upon the interest rate, or the benchmark rate, which is what it's called. And so that benchmark rate will change, and this calculator will change. We'll change the benchmark rate as that changes. So today, based upon the benchmark of today, then this is the mortgage payment that your income, or $8,000 a month, will qualify for, which results in a mortgage of $436,000. So if you had 5% down, then that would be a purchase price of $441,000 with $22,000 down, which is the net, resulting in a net of $419. So 41 minus 22 is 419. The default insurance premium is then added on to the mortgage, which is for all mortgages with less than 20% down. The banks and trust companies, credit unions are all required to get default insurance. It's legislated under the Bank Act, and the default insurance is offered by 3 insurers: CMHC, Genworth, and Canadian Guarantee, and they all offer basically the same premiums, exactly the same premiums, slightly different programs. Some of them are a little bit more lenient to qualify for. Some of them have some back-end programs. So they are slightly different in what they offer, but the premium is definitely exactly the same. So this net amount plus the insurance premium results in the mortgage of $436,000. Your payment, based upon the interest rate that you chose up there, 2.8 something we chose, is $2,031 a month. And you can see that that payment is different than this here. Property taxes, we said property taxes were $33.50, so that works out to be $279 a month. Your condo fees are $300, so that shows that right there. And therefore, the total payment, including property taxes and condo fees that you'll pay on a monthly basis, is $2,600. And the last calculation is the balance at the end of term. So we chose a 5-year term right here, 5-year term. And so the mortgage starts off at $436 and goes down to $352. So you're actually paying a fair bit of money off. A little over $80,000 is being paid off towards the principal over 5 years, which is 60 months, which is pretty good. If you want to see how much in a year is paid, we just go up here and change this number to a year, and then we can scroll down here and see it's 406. So you paid about $30,000 in the first year as you pay down the principal. So that's pretty good. So 2 years, and you can see that number is $393. The other thing I thought I would say is that if you wanted to find out your own specific numbers or review and get pre-approved officially, then please put in your name and email, your phone number, and press apply for a pre-approval. We'll receive these numbers, and so will you. So you'll get a copy of all these numbers, and then we'll connect and review the numbers and get you an official pre-approval. Let's look at another income. Let's look at another income. See, let's say you make $135,000. Let's say you have 10% down, and let's use a 5-year term again. Let's go with a little lower interest rate and 25-year amortization. Let's say it's a house instead of a condo, and maybe $4,000 a year in property taxes. So then you've got your gross income before income taxes based upon 135 is $11,250. Property taxes are $333 a month. This, you want to look at this number and compare it to here. Sometimes I'll accidentally put a monthly payment here, and then you see this is really low. So when you look at these numbers, you make sure that everything looks right so that you can see that your numbers are correct. So this is the qualifying payment on $11,000 a month. So that is quite a significant payment. So and I've had many clients who do not want to make that large a payment on a mortgage. So they know they can qualify for a $750 purchase, but they really don't want to do that. They'd rather purchase something slightly lower. So this is the qualifying payment, and then the net mortgage amount that you qualify for, $710 with 10% down. The net amount is $690 plus the insurance premium results in the total mortgage amount. Your payments are $2,900 plus $333 a month, which is $3,300 a month. This is the qualifying payment. This is what you would actually pay at the interest rate we chose. And again, I've had lots of clients who said, we're only budgeting for, 3,000 or 2,500. And so then we play around with this number and figure out what it is that they purchase price based upon the budget that they have. And so that they're not overbuying and then they're going to be, not happy down the road when they can't go on vacation and do all those other fun things you can do with your extra cash. So at the end of 5 years, and we did say 5 years here, you can see that the mortgage balance goes down by, $110,000. That's a substantial decrease in the principal balance over that time frame. So this calculator can be found on this page, mymortgagebroker.com, income you need for mortgage, and I will put that link in the description below. So make sure you press subscribe and like this video, and we will talk to you again in the future. Have a fantastic day. Thank you very much.